Most people think that buying stocks is how you get rich. It's not. Buying stocks randomly with no strategy, no understanding, no education, that's how you stay broke for the next 20 years and be very frustrated. But here's what nobody tells you. The people who actually build wealth through the stock market, they don't guess, they don't follow tips from Reddit or just buy a stock because they heard about it on the news or on TikTok. And they definitely do not panic sell every time the market drops. They understand that the market volatility is actually an opportunity, not something to panic about. And so they have a system. And today I'm going to show you exactly what that system looks like, so that by the end of the video, you don't just understand what a stock is, but why the smartest people on the planet use them every day to build compounding real generational wealth. And that right there separates the investors that win from the investors that lose. So let's get into it. A stock is very simple. When a company needs money to grow, they don't always just go to the bank and get a loan. Instead, they sell very small pieces of their company to the public. So those small pieces that they're sharing are small pieces of ownership called shares. So when you buy a share, you buy a tiny little sliver of that business. If Apple sells 1 million new iPhones and their profit goes up, your slice becomes more valuable. In short, that's it. That's what a stock is. Now, here's what most people get wrong. A lot of people think stocks or treat stocks like they're a lottery ticket. You buy one, you hope it goes up, and then you sell it. But trust me, that's gambling, that's not investing. Warren Buffett, arguably the greatest investor to ever live, said something that changed the way I think about this. If you aren't willing to buy a stock and keep it for 10 years, don't even think about buying it even for 10 minutes. He's not talking about picking the hottest stock. He's talking about conviction. That's the mindset shift that separates wealth builders from wealth losers. So why do serious people buy stock? Well, there's 3 reasons. Number 1, for capital appreciation. That just means that your investment grows in value over time. If you bought $10,000 worth of the S&P 500 index, which tracks the top 500 US companies 20 years ago, you'd have over $67,000 today without having to add another dollar. That's the power of letting businesses grow your money for you. Reason number 2, for dividends. Some companies pay you just for holding their stock. Every quarter, they send you a check or add money directly back into your account, whichever you choose. Think of it like rental income, but from a company instead of a property. Johnson & Johnson, Coca-Cola, these companies have not only paid, but also raised their dividend for 50 consecutive years. Even during recessions, even during market crashes, working for you while you sleep. And then reason number 3, for inflation protection. Here's the truth that nobody says out loud. If your money is just sitting in a savings account earning 0.5% and inflation historically is about 3 to 4% per year, that means you're getting poorer every single day. Everything around us gets more expensive by 3 to 4% every year. And so if your money is not at least making you 3 to 4%, then you're literally working backwards. It's historically average about 10% rate of return every year over the long run. And that right there is how real wealth is built. Now, why do most people still fail when it comes to investing in stocks or the stock market? Well, here's the part that they don't put in the beginner guides. Knowing what a stock is simply is not enough. Understanding why stocks go up isn't enough, because knowledge without a personalized plan is just trivia, and again, it's just gambling. I want to tell you something honestly. People who just start out investing typically make the same 3 mistakes. Mistake number 1, they invest based on emotion. The market drops 15%, they panic, they sell. The market jumps 20%, what do? They get greedy. They buy at the top. We are taught since we were kids to buy low and sell high, but for some reason, everybody tends to do the opposite because we're human, we have emotions, fear is involved, and then greed and excitement's involved. But one of the biggest parts of investing is behavioral management. You want to understand how to manage your behaviors through the ups and downs of the market, especially now more than ever. The stock markets are so volatile right now with what's going on in the world and the US government and economy. So understanding how all this works and being able to manage your emotions when it comes to investing is an utmost priority. Mistake number 2 that I see is they have no asset allocation. They go all in on one stock or one sector or one trend. When that trend dies, and it will, they lose 40, 50, or 60% of their portfolio. And I want to tell you a story. I remember it was probably a decade ago, and I was working with clients telling this story about how the stock market works. And I will never forget it. This is whenever Snapchat was starting to become very big, a big tech company. It was before Instagram started doing their stories. And so Snapchat stock was booming and everybody wanted a piece of it. But guess what happened? All of a sudden, when Instagram started to add their stories, meaning you could post your story on Instagram, Kylie Jenner went on her Instagram and made a post and simply stated, "Hey everybody, I deleted my Snapchat. Moving forward, you could see me here. I'll be on Instagram, follow my stories." And the Snapchat stock the next day went down, I think like 40% in one day. Imagine working at Snapchat and you have all of your wealth, all of your money in one stock because it's booming, it's a social media platform. Why would it ever, go down in that moment? There was no reason to believe that anything would hurt the company. The stock market was doing well outside of this. But because Kylie Jenner went on her Instagram and made that announcement, Snapchat stock went down 40% in, I think, the next day. That right there, that story alone is why diversification is so unbelievably important. And the mistake number 3, I see this all the time. They never have an actual strategy tied to their actual wealth or their life. And this is the one that costs people the most. Because here's the thing, a 28-year-old building a portfolio is gonna look completely different than a 52-year-old building a portfolio. It might look fine from the outside, but it's not gonna help you see clearly. So what does actually work? Morgan Housel, the author of Psychology of Money, puts it best. The most important financial skill is getting the goalpost to stop moving. In other words, know and understand what you're actually trying to build. Are you building retirement income, generational wealth, a business tax strategy? The answer to that question is going to change everything about how you invest. The investors that consistently win are not the ones with the highest IQ. They're the ones with the clearest plan and the discipline to execute it. They don't watch CNBC every morning to look for signals or what stock to buy next. They rebalance quarterly, they contribute consistently, even when the market looks terrifying. They understand that volatility isn't the enemy, it's actually an opportunity. The enemy is panic. What you never want to do is panic sell, please. And the best way to eliminate panic is work with someone who's done it hundreds of times. Someone who can look at your full financial picture, your goals, your income, your timeline, and build a strategy that will actually work for you. So here's what I want you to take from this video. Stocks are not a get-rich-quick scheme. They are a long-term game tool. They're one of the most powerful wealth-building instruments ever created. But correctly is the key word here. If you're serious, and I mean serious, about building financial momentum, not just learning the basics, but actually having a clear, personalized roadmap, then the next step isn't another YouTube video. It's a real conversation with someone who can take everything that you just learned and show you exactly how to apply it in your own life, your own goals, and your own timeline. That's what you deserve. Why not take time, energy, and money and invest that in your financial future? Because that's what we do at Financial House. And we've built a 90-day program specifically for our higher income earners that you will walk into that program feeling a little bit chaotic, confused, having no systems in place or structure. And you will leave that program having a full foundation of education on every stage of a financial plan and how to build wealth, how to manage your behaviors when things are going crazy, and how to make sure your money's in the right places and help open your eyes to the different strategies that are out there so that you can really start to play the game of money. To apply to the program, there's a link in our bio and our website, www.thefinancialhouse.com. If that's you, don't wait. I want to help. Let's build something real.